The last time, at least in the US, any car company achieved mass manufacturing was about 100 years ago, and then Tesla. The issue is definitely not coming up with a car design. It is absolutely all about building the production system. The difficulty and value of manufacturing is underappreciated. It's like relatively easy to make a prototype and extremely difficult to mass manufacture a vehicle reliably and at scale.
Tesla CEO Elon Musk is the first person on Earth to have a net worth of nearly $500 billion, and this has been driven by the rise in Tesla stock as a bulk of his wealth comes from his holdings in the company. Share market data shows that Tesla stock has rallied around 80% in the last 1 year, taking the company market value to $1.27 trillion and Elon Musk's net worth to $427 billion as of January 15, 2025. Let's break down what's behind this surge, why investors are flocking to Tesla, and what it means for the broader EV market. On January 1, 2024, Tesla's market cap stood at $789.89 billion. Fast forward to December 6, 2024, and that number nearly doubled to $1.483 trillion, according to company's market cap. This was an 87.75% increase in less than a year, making Tesla the first auto company to cross the $1 trillion milestone. This surge in valuation has translated directly into Elon Musk's personal wealth, as he owns about 13% of Tesla, according to the company's 2024 proxy statement. Starting the year 2024 at $229 billion, Musk's net worth skyrocketed to $486 billion by December, an astonishing 112% increase, as per Bloomberg Billionaire Index data. In simple terms, Musk's wealth grew by $245 billion in 2024 alone, making him the first individual ever to cross near the $500 billion mark. So what's driving Tesla's share price surge? Tesla's advancements in AI, particularly with its self-driving technology and Dojo supercomputer, have captivated investors. The introduction of Optimus, Tesla's humanoid robot, has added another dimension to its growth narrative. According to Morgan Stanley, Tesla's unique combination of expertise in data collection, robotics, energy storage, and AI has positioned it well in the emerging autonomous mobility market. The 2024 U.S. presidential election, which marked Donald Trump's return to office, has heightened expectations for regulatory easing in the autonomous vehicle sector. This political shift has significantly boosted Tesla's growth prospects. Tesla shares, often seen as a bellwether for the Trump trade, have surged approximately 65% since Trump's victory, according to stock market data as of January 15. Tesla overtook one of Germany's most prized premium car brands, Audi, last year, despite selling fewer vehicles than expected. Volkswagen AG's Audi sold 1.67 million vehicles in 2024, down 12% from a year earlier, dropping the brand behind Elon Musk's Tesla, which delivered 1.79 million vehicles last year, according to company statements. Tesla's Q3 2024 revenue grew 8% year-on-year to $23.35 billion, with net income rising to $2.17 billion. Expectations for record Q4 deliveries have further fueled investor enthusiasm. There has been a shift in the automotive and technology industries, with EV adoption increasing. As per International Energy Agency's data, electric car sales remain strong in Q1 2024, surpassing those of the same period in 2023 by around 25% to reach more than 3 million. Here are a few reasons to consider buying Tesla stock dominance in the EV market. Tesla remains a leader in the electric vehicle (EV) market, with high global market share and strong brand recognition. Expansion into new markets, e.g. Cybertruck, semi, and smaller, affordable EVs, may boost sales and revenue. Technological leadership. Tesla's investments in autonomous driving technology, including the full self-driving FSD software, position it as a major player in the future of transportation. Development of its Dojo supercomputer for AI training could provide competitive advantages in self-driving and other AI applications. Renewable energy growth. Tesla's energy business, including solar panels and energy storage products like Powerwall and Megapack, has significant growth potential as the world transitions to renewable energy. Global expansion. Tesla continues to scale production capacity with factories in the US, China, Germany, and potential new locations. This global expansion may lead to higher production volumes and lower costs per vehicle. Long-term vision. Elon Musk's long-term focus on sustainability, innovation, and vertical integration appeals to investors with a long-term investment horizon. Tesla has been one of the best-performing stocks on the market over the last 5 years, but also remains a battleground among investors. CEO Elon Musk has long been a lightning rod for controversy, most recently for his strong support of newly elected President Donald Trump, who has put him in charge of the new Department of Government Efficiency. Tesla stock has also soared since Trump was elected, up by around 70% since then, making the company one of the largest in the world. According to this research from the Motley Fool, the company was the 8th largest in the world as of January 6th. Tesla's bona fides are well known by now. The company is one of the largest electric vehicle EV makers in the world. It was recently surpassed by China's BYD, but the two are still closely vying for the top spot. However, Tesla isn't just valued as a straight EV company. Investors have bid up the stock price on hopes for its autonomous technology, which includes both autonomous vehicles like the recently unveiled Cybercab and its autonomous robot, Optimus. The timeline for those products going on sale still isn't clear, but Tesla aims to begin production of the Cybercab by 2026. Shares of the EV maker are on a roll following Trump's election, and it's one of the biggest companies in the world. But is it a buy for 2025? Let's take a look at the bull and bear case for the stock. The Tesla bull case. Tesla pioneered and essentially proved the market for electric vehicles, and it's built an unrivaled brand and ecosystem in the EV industry. It's built the world's largest fast-charging network, and its brand ranges from mass-market cars like the Model 3 to luxury vehicles like the Model S, X, and Cybertruck, whereas rival BYD plays at the lower end of the EV market. In addition to a strong brand and global positioning, Tesla's autonomous technology also gives it an advantage. While Alphabet's Waymo is generally believed to be the technological leader in autonomous vehicles and operates the largest active autonomous ride-sharing network in the country, Tesla's much larger fleet of vehicles and its ability to upload AV software like full self-driving to any Tesla on the road potentially gives it an advantage in the autonomous race. Finally, electric vehicles only have a small percentage of the overall market share in the auto sector, and public policy around much of the world, along with environmental concerns, is helping to convert market share to EVs. That should favor Tesla over the long run. The Tesla bear case. While Tesla has a lot of future potential, there are reasons to be concerned about the business and the stock. First, Tesla's recent financial results have been woeful. The company finished 2024 with a decline in vehicle sales, its first since 2011. In the third quarter, overall revenue was up 8% year over year due to sharp increases in its energy and services businesses. But automotive revenue grew just 2% to $20 billion. Tesla's profit margins improved, overcoming an earlier decline in profits. However, the business will be tied to revenue growth as the auto industry typically has low gross margins. Musk has said that production volume would increase by 20 to 30% in 2025, but Tesla has not always followed through on Musk's targets, and there are genuine questions about demand in the EV industry as growth in the US has slowed across the industry. That's a sign that the transition to EVs may not be as smooth as some hope, and it could get worse with the Trump administration in office as Trump is expected to get rid of the EV tax credit and take steps to support fossil fuel companies. Additionally, Tesla stock has gotten pricey after the recent rally. It trades at a price-to-earnings (PE) ratio of roughly 200 based on adjusted earnings, and its primary business is in a sector where most stocks trade at a PE of less than 10. Tesla deserves a premium for its potential for disruption in autonomy and beyond, but a PE of 200 for a company with nearly flat revenue growth currently is essentially unheard of. Is Tesla a buy for 2025? Tesla's vision for autonomy might be unmatched, but meaningful execution still seems several years away. Meanwhile, the stock looks incredibly expensive, even for a tech company, and the EV demand growth curve investors were counting on seems to be fractured. The Trump administration also looks set to challenge the EV industry further. At this point, buying the stock seems to be a clear bet on the company succeeding in autonomy, but the valuation still leaves a long way for the stock to fall if the business disappoints.